Apple iPhone 17 series sees massive demand in US and China. Apple's iPhone 17 lineup has become an instant hit across the US and China, outperforming last year's models in early sales figures. Analysts report that pre-orders for the iPhone 17 Pro Max exceeded expectations, driven by its advanced AI camera features and longer battery life. The strong response pushed Apple stock up nearly 3% in early trading. Experts believe Apple's success reflects a rebound in global smartphone demand and renewed consumer confidence. With competitors like Samsung and Google focusing on AI-integrated devices, Apple's dominance appears set to continue through the holiday season. AWS restores services after major outage hits millions. Amazon Web Services, AWS, has nearly recovered from a widespread outage that disrupted hundreds of popular apps and websites across the US. The downtime affected online payments, cloud tools, and streaming services for several hours. Amazon cited a network configuration error in its US East data center as the cause. The outage triggered frustration among businesses that rely on AWS for hosting critical operations. This incident marks the company's second major disruption in 2025, raising questions about cloud infrastructure reliability. Experts say such outages highlight the growing dependence of global internet systems on a handful of cloud providers. Cybersecurity shock. F5 systems breach raises alarm. F5, a major cybersecurity and cloud infrastructure firm, confirmed a large-scale data breach affecting parts of its source code. Investigators believe the attack may have been orchestrated by a state-sponsored group. The compromised systems could expose enterprise networks and government clients using F5's security products. Experts warn that the incident could have widespread consequences for organizations relying on F5's traffic management technology. U.S. cybersecurity agencies are now assessing potential risks to federal systems. The hack follows a wave of similar breaches targeting infrastructure software providers, emphasizing the urgent need for stronger digital supply chain security measures. U.S. and Australia partner on critical mineral supply chain. The United States and Australia have signed a new agreement to strengthen cooperation on mining and refining critical minerals such as lithium, cobalt, and rare earth elements. The deal aims to reduce dependence on Chinese suppliers and secure raw materials vital for batteries, semiconductors, and defense technologies. Officials say the partnership will accelerate domestic processing and create thousands of jobs in both nations. Analysts view this as a strategic step toward boosting clean energy and semiconductor independence. The move underscores Washington's growing focus on economic security and technological self-reliance amid global supply chain competition. U.S. business lobby opposes new export curbs on China. A coalition of major U.S. business groups has urged the Trump administration to halt new export restrictions targeting Chinese tech firms. The lobby argues that the rules are harming American companies by blocking billions of dollars in technology sales. Firms including chipmakers and cloud software providers say the curbs could push Chinese buyers toward competitors in Europe or South Korea. The administration, however, maintains that the measures protect national security. The dispute highlights growing tension between Washington's security policies and the business interests of U.S. tech giants, raising uncertainty for global supply chain stability. Iron Mountain unveils AI-powered data platform upgrade. Data management leader Iron Mountain has launched a major upgrade to its Insight DXP platform, integrating advanced generative AI tools. The new system helps companies organize and analyze massive amounts of unstructured data, such as emails, documents, and videos, using agentic AI automation. The upgrade allows clients to streamline workflows across cloud and on-premise environments. Iron Mountain says this technology will enhance productivity and improve compliance for large enterprises. Analysts note that the move reflects growing demand for enterprise-grade AI solutions beyond consumer applications. The company's innovation highlights how traditional storage firms are evolving into AI-driven data intelligence providers. U.S. renewable projects face policy-driven slowdown. Developers of solar, wind, and battery storage projects across the U.S. are warning of delays due to shifting federal and state policies. Industry reports show that unclear tax credit rules and new permitting requirements are increasing costs and slowing progress. The uncertainty has already caused some renewable energy startups to postpone projects planned for 2026. Experts say these disruptions could hinder the Biden administration's clean energy goals. Despite the challenges, investment in grid technology and smart battery systems remains strong. The sector hopes for policy clarity to maintain the U.S.'s leadership in the global energy transition. Tech layoffs continue despite AI investment boom. Major U.S. companies including Oracle, Nike, and Scale AI have announced fresh layoffs this month, continuing a trend that began early in 2025. Despite record-breaking profits in the AI sector, many firms are cutting staff to reduce costs and shift resources toward automation. Analysts say this reflects an ongoing AI reshuffle, where demand for traditional tech roles is shrinking while AI-specialized jobs are rising. The layoffs have affected thousands of U.S. workers in both tech and support divisions. Economists warn the imbalance could widen the digital skills gap if retraining programs aren't accelerated soon. Tech stocks lead U.S. market rally on earnings optimism. U.S. stock markets surged on Monday, driven by strong earnings reports from major tech and semiconductor companies. The Nasdaq rose nearly 2%, while the Philadelphia Semiconductor Index hit a record high. Investors are betting on continued AI chip demand and resilient corporate profits. Companies such as NVIDIA and AMD led the gains, supported by positive forecasts for 2026. Analysts say the tech sector's momentum is helping to offset weakness in manufacturing and retail. Wall Street expects upcoming quarterly results to reinforce confidence in the U.S. economy despite inflation pressures. Easun Technology faces NYSE compliance warning. Easun Technology Limited, a Hong Kong-based electronics manufacturer listed on the NYSE American Exchange, has received a non-compliance notice for failing to meet listing standards. The exchange warned that the company's low market capitalization and delayed financial filings could trigger delisting if not corrected. Easun said it is taking corrective actions to regain compliance within 6 months. The case highlights the increasing scrutiny faced by foreign tech firms operating in U.S. markets. Investors are closely watching how regulators enforce transparency rules amid growing global market tensions. U.S. tech hubs compete for $220 million federal innovation grants. 19 federally designated tech hub regions across the U.S. are racing to refine their proposals ahead of the November 7th deadline to capture portions of a $220 million grant pool allocated by the Economic Development Administration, EDA. These hubs, focused on areas such as semiconductors, AI, advanced materials, and manufacturing, say their core missions remain unchanged despite administration shifts. One hub leader said the core of EDA has remained the same, in supporting market-ready innovation. Some regions are adapting narratives around national security relevance and reducing emphasis on equity language to match updated federal priorities. Wall Street rallies as tech and semiconductor shares surge. U.S. stock markets climbed strongly on Monday, with the S&P 500 rising about 1.07% and the Nasdaq Composite up roughly 1.37%, led by technology and finance sectors. The Philadelphia Semiconductor Index reached an all-time high, reflecting investor enthusiasm ahead of Q3 earnings results. Analysts suggest optimism is returning as many companies report solid results and the uncertainty around regional bank credit quality eases. With key inflation data and the upcoming regulator announcements in the mix, markets appear to be embracing risk again. AI investment boom raises questions over U.S. economy impact. As U.S. tech firms ramp up spending on AI infrastructure, expected to hit about $400 billion in 2025, economists are debating whether this AI-driven capex spree may crowd out broader economic investment. Companies such as Amazon, Microsoft, and Alphabet are fueling the wave with cash flow and debt. Some fear echoes of the dot-com/telecom bubble, while others argue the spending is self-funded and unlikely to spark economic collapse. Investors will closely watch upcoming earnings for signs of whether AI infrastructure growth is sustainable. $100K H-1B visa fee disrupts U.S. tech startups. A new rule mandating a $100,000 fee for each new H-1B 1B visa is causing major headwinds for U.S. tech startups and firms reliant on overseas AI talent. The policy aims to prioritize domestic workers and restrict outsourcing via the H-1B program, but small firms in AI and emerging technologies say the fee is burdensome. Venture capital investors and company founders warn that the rule may slow innovation in a highly competitive global market. Many international professionals face uncertainty about their U.S. status, while policymakers search for ways to train domestic talent. U.S. Business Lobby pressures administration over China tech export curbs. The U.S. business lobbying group National Foreign Trade Council, NFTC, has called on the administration to rescind the affiliates rule, a regulation that blocks U.S. firms from exporting goods/technology to subsidiaries of sanctioned entities in China, even if that subsidiary itself is not sanctioned. The NFTC argues the rule has already halted billions in exports, threatens U.S. companies' global supply chain roles, and may backfire by pushing Chinese buyers to non-U.S. vendors. The Commerce Department and White House have yet to publicly respond.